Good morning and welcome to the latest in our series of Ipsx webinars. My name is Richard Lester and I'm delighted to be the chair of today's session. Just a few housekeeping notes before we start. All attendees are on mute, so if you would like to ask a question, make a comment or a point, please may I ask that you use the Q&A box. We will take these in as the session unfolds or towards the end of the session. And we also have a poll for you and we'll explain a little bit more about that shortly. So let's make a start. Today, I'm delighted to be joined by 4 core technology providers to discuss how digital transformation is shaping the trading platforms of tomorrow. Please welcome Russell Thornton, Head of Trading Strategy at Iress, Luke Ryan, Senior Technical Product Manager at Morningstar, Stephane Leroy, Chief Revenue Officer at QuantHouse, and Rafah Hanna, our expert consultant in market data and financial technology. Gentlemen, before we kick off, we thought it would be interesting to frame our core topic with a short question for our attendees. So can we have the question on screen, please? And the question is, do you believe the recent explosion in retail trading volumes and the move to more active trading strategies is here to stay? I'll give you a moment to read and digest this and leave it on screen. That's great. Can we take the question away now and get the results, please? And that's a very interesting way to start our conversation. So over 90% of our early viewers here believe that this surge in retail and non-institutional trading activity, so individual investor activity, is now something that will determine the way that markets trade. And maybe it's a good point to start off with here, Russell, and understand a little bit more about what this means for your business model and your plans going forward.
Yeah, I guess, rise in retail. There's probably a number of factors, really. This kind of seems to have created the perfect storm over the last 12 months or so. You've got a number of technology factors, which actually I think are outside of the technology that companies like Iress control. So if you're looking at kind of mobile capability, social media, chat rooms, bulletin boards, they're all technology that's changed the way things that the market's operating, but they're nothing to do with the trading platforms that we're currently providing. But I think if you put that technology piece together, you lower the cost of trading. So you've got fractional dealing, so you can deal now in the large shares, even if the share price is hugely expensive. You've got low commissions coming through, and you combine that with all the social aspects that we've had over COVID. That's given us this kind of sort of big explosion in retail volume. I think what we've also seen is an amount of kind of emotional investing. I think one of the big changes that we've seen is that a lot of the things that are happening in the markets are now not necessarily fundamentals based. You've got a very big cohesive unit of people in the retail world acting in a way that kind of appears as one. And we've generally, I've never heard the phrase before, but meme stocks. There's all sorts of things happening out there, and the markets are definitely being pushed by retail in ways that they weren't before. And I think where that does reflect on our industry is that kind of monitoring of retail activity. There was the old kind of adage of when Mr. and Mrs. Smith are looking at this particular share, they're thinking of investing in it. That's the time to get out. That's now not the case. Retail actually think are driving a lot of this in some cases, not in everything. But certainly the impact of retail is a lot greater now than it was before and acting in a very different way. From an Iress perspective, we have platforms and technology on the retail side in the wealth management space and retail broking. We host obviously the RSP network that Ipsx will be sitting underneath very shortly. And we've seen a lot more firms joining that network. I think last year we had, I think it was around 21 billion sterling passed through the RSP network in terms of mainly retail flow. That's about a 200% increase over the previous year. On our busiest day, was well over 100% higher than the previous one. So we're seeing increased flow coming through. We're seeing more people joining that network. And we're also now starting to see an increase in the number of people wanting to be on the opposite side. So the market makers, the RSPs, quoting those prices. And again, they'll be quoting IPSX prices on there as well. So
I think it's a very interesting point, Russell, you touch on here around the 200% increase in volume. And Luke, if I could pass over to you on this, obviously the words fractional, emotional seem to be things that come through now. How are you seeing this transform the way your business is evolving around the data consumption and the interaction from the investment community?
Yeah, so on the side of the market data business, which is primarily driven through the vendor relationships and redistribution, we're seeing a lot more activity now in retail platforms coming up looking for data, and more people asking for data sets that historically have not been very high interest. But there's a lot of interest now in more like sentiment data, social media data, news data. And for a traditional vendor, that becomes quite a challenging aspect compared with the amount of volumes we're seeing come through the network as well. Like Russell said, there's been a huge increase in the amount of trade and activity that's been driven from the retail customers. But that also gives us a lot of opportunities as well. How does a company like Morningstar, which has always been driven towards providing insight to the investors, help the investors? What data sets can we add to our data feed to enable those retail investors to get more insight into the data, trade more stocks that they and instruments that they understand and want to be involved in? So from a market data vendor point of view, we're having to adapt our business to not look at the traditional ways that we would sell data, but more web APIs, cloud technologies, dividing the data sets up into smaller chunks that make it easier for the retail investors to digest. So more in that sort of sense moving forward into the future than the traditional bulk data feed type business that as a vendor we've been used to.
Yeah, and I think that leads us nicely, Stephane, onto an introduction for you in regards to how you are defining the technology requirements from people and the connectivity for APIs for this new demand curve. Obviously, there are different consumers now of data than there were. A lot of it is automated, and it's something hopefully we can explore as we go through this in regards to AI and algorithmic trading and how that's redefining what you are putting in place for the future.
Yeah, I think there's a very interesting phenomenon we are witnessing now for 2 years and a half, because historically QuantHouse is really providing leading edge technologies to leading edge hedge funds and banks and capital markets, financial institutions. But so retail was really not really our area of focus. But now what we've witnessing is the fact that the knowledge gap is reducing, in the sense that more and more retail users, first of all, have increased their knowledge of technology, because more and more going forward, trading will be about really trading technologies, API-driven technologies, and so on. And here you can see that a lot of retail brokers are coming to us to have the possibility to complement what they are traditionally proposing to their clients with API driven technologies, which is, I think, a first signal for me that indicates that not only this recent rise of retail flow is not just a phenomenon that is just a peak and that's it. No, it's here to stay, because the retail, I would say, traditional traders has more knowledge about technologies, and through the recent investment of all those retail brokers, he has the possibility to really have technologies which are really comparable to market makers, traditional PVs, and which is also certainly one of the reasons why, for example, that in the US now on the NYSE you have, I think, 22 to 25% of flow, which is really coming directly from retail. So I think it's a nice phenomenon, and certainly here to stay. And we are here at QuantHouse quite happy to help this new community of users be able to trade on par with all the traditional community of traders in the market.
Yeah, it's an interesting point you make around the market share numbers from NYSE. I mean, in the UK, we're probably about half that number now, although the number is accelerating rapidly, and obviously, as Russell said, exploded towards the end of last year and seems to have retained much of that. Rafah, I mean, in regards to what you're seeing as an overview of the businesses you work with, what are people doing to adapt to this in where you're seeing and the demand and the supply side of things?
It's a good question. So at the core of everything I've heard from our colleagues and friends is two things. It's about the increase of inclusion of data availability, which means the reduction of exclusion. So what that means is the availability of the decision-making tools is driven by the type of data, the latency, the depth, the breadth, all of those things. When we look at organizations such as TradingView and eToro, if we take TradingView, cutting edge charting, you know, some describe as the best in the world. When we look at eToro, the recent press they had was that they had 20 million users. These are enormous numbers, and not only enormous numbers in terms of the incremental cost of data, but enormous numbers to support those people with questions and education and so on. That's number one. I think what's also happened is that there's, because of the technology driven by the likes of QuantHouse and Iress and Morningstar and others, this has narrowed the gap between what we used to call the institutional block trade, if you like, the dark pools, whereas now we have dark pools that are in themselves retail driven, almost a legalistic sense of class action trading, where there is, as Russell said, there's sentiment, meme, and Luke said the same. You know, we're seeing social media become a decision-making input, but also decision-making tool in that respect. But also, I think when we draw it back to IPSX, we can see how technology is helping such a venue, which 10 years ago would never be up and running, because it would just be outside the scope of a bank, a financial institution, things like that, which has small but very valuable data. And I think that that's a huge attraction to the retail market there. So retail trading has certainly driven the technology. I don't think it's the other way around, because none of Morningstar, Iress or QuantHouse will ever want to be leaders in their field, but they want to be standing shoulder to shoulder with the client, being led by the clients in that respect.
So our clients are now looking for different data, different ways of consuming data, which we're definitely seeing. And obviously this transition to what is now active investment rather than passive has probably caught a lot of us by surprise. Certainly myself, I'm surprised by the aggressive move this way, and it doesn't seem to be retrenching. So I guess, you know, the next question to the panel is, you know, where are we on that journey, do you believe? If we move back to a world of active management where investors are looking to put their money to work far more actively because they need the returns associated, what dynamics occur now within the next 3 to 5 years to change the structure for yourselves and then for us accordingly?
So maybe if I start this off and throw some curveballs to my technology and vendor friends there. But what's happened is we hear this a lot all the time. It's, you know, the end of the world is nigh and so on. We're just at another critical juncture of data. That's all it is, in my view. And what we see is, again, demand that is, you know, an increase in herd-led demand here. You know, and this has become a phrase in the last year and a half, of course, because of the pandemic. But if we look at it, there's been an increase in machine readable news. The likes of other vendors and news providers, you know, PA Newswires, Dow Jones, have invested huge amounts of money, time and effort in that AI sort of technology there. And I think that has allowed evolution to occur from a professional user to a prosumer, which we've heard before. The level of education is higher, the level of tools available is higher. There's a greater incidence of understanding of data, and that's testament to the QuantHouse, the Iress, the Morningstar doing their job. in that respect, but there's still more to do, of course.
And I guess, Stephane, that leads into saying, I guess from Rafah's point is, how do the other side of the fence here, the users of data on the market, the banking side, adapt to this accordingly? Because this is obviously a new paradigm for all of us.
Yeah, I mean, I think what is really great as a trader, in fact, a trading participant or a retail trader when trading on Ipsx, is that even if you are a retail trader, you have exactly the same type of tools and possibilities of any big banks or big institutional, which would be able also to trade on Ipsx, in the sense that the technology choices of Ipsx has been very clever in the sense that everything is open. So if you want to trade with screen-based trading applications and more traditional, I would say, tools, you have that available through leading edge vendors. But if you want really to have a more, I would say, innovative way to trade, or if you want to dive into algorithmic trading, automatic trading, you have also the same type of API tools that leading hedge funds has in the world today, due to, in fact, the choices that and the providers of technology such as QuantHouse, Ipsx is relying on. So I think here it's certainly a nice way for anyone to engage and start trading his portfolio on with the Ipsx I would say instruments, because in fact it's you are sure that day one you are able to tackle any kind of opportunities, and you are on par with any kind of market participants, whether it's a market maker or liquidity provider or just a trading member on this Ipsx platform. So that's certainly something to highlight, I think.
Sorry, thank you, Stephane. And I guess then, Luke, and following on from there is, are you seeing a substantial shift in demand for data as Morningstar distributes in regards to this? And where do you see things moving going forward? What were people using presently that they're not using as much, and what are people looking to use as they transition to a new trading style? Luke, you're on mute. Luke, you're on mute.
Yeah,
Thank
sorry,
you.
I was.
No worries.
I don't think there's no real big shift in terms of moving away from your traditional trading venues. We're seeing more trading occur on those trading venues. I think there's a leveling of the playing field, like has already been mentioned here. Retail investors, it's becoming easier for them to invest in the same products, the same ways as the banks and the hedge funds. They have access to similar data sets. Technology is making it easier for them to find those data sets. They're finding the research, they're finding the same information. There's companies out there that are publicizing things openly in social media, sentiment data. And then there's platforms coming on like Ipsx, which make it really make it simple across the board, that everyone has the same level playing field to trade on. And I think that's been the big shift in terms of activity. It's not so much the data sets are changing traditionally. There are new things coming on board like Ipsx. There are new providers out there that are providing access to social media and sentiment data that make it easier for the retail investors. And generally speaking, there's a bigger growth in terms of providing the insights of that data, and less emphasis now on providing that data quickly. So a big thing at the moment is not so much how quickly can I trade, but can I get ahead of the market by using the intelligence that is freely available to actually find something that no one else is currently looking at, or get on board early whilst it's ticking up. I think GameStop is a great example of that happening just this year. As people got on board using the social media, people made lots of money early on by getting in whilst it was ramping up and getting out at the right time. And I think that access to that sort of information outside of your traditional low latency trading information is key for the retail investor, and how making that available to people from a technology point of view, from a vendor point of view, a data provider point of view is key, I think.
I absolutely agree. And Rafah, I know you're quite commonly using these tools, but the the sites that now distribute this information becoming very important to people. I'm sure you have some strong views around that.
Yeah, I want to just challenge something my dear friend Luke said, which is about the data sets not changing, but he also said they're evolving, and he's absolutely correct in both of those. But one of the thing I want to challenge is that we are seeing from exchanges the advent of micro and mini products, particularly in the futures side, and particularly in the crypto space. You know, crypto is now evolved into the hot and cold wallets and the bits and pieces of them and so on. So there is definitely a move towards retail. And I definitely am seeing some very high net worth people who are setting themselves up as with APIs, with some serious strategies, and things like that. So I think the nature of how retail is being served is no longer retail. There is now much of a narrowing of the gap between those two user types.
Yeah, absolutely, and I will come back to to illustrate, in fact, the fact that the gaps is narrowing between traditional hedge funds and what retail now users have access to in terms of technology, at least when they trade on Ipsx, is the fact that we at QuantHouse, we have an API-based driven framework. Any kind of Ipsx data now is accessible for and from those retail traders through this API, whether you want to have access to historical data, whether you want to access to a backtesting environment, whether you want to have access to analytics frameworks, and everything is available as a linear hedge funds would use and would leverage in terms of technology. And this is, I mean, if we think back just 5 years ago or even more, that would be an incredible statement at that time to say that a linear hedge fund in the world would have access to exactly the same type of technology as Mr. Roger Smith as a retail trader. So, and this is what once again, what is really has to be highlighted with Ipsx is when you trade on Ipsx, you have the full depth and breadth of leading edge technology, data, trading systems you might think of day one.
I think I'll just sort of quickly add as well. I think whilst the data sets are evolving, and yes, there are additional pieces of data out there now around the social media side of things. Actually, one of the examples I saw is not necessarily financial, but where you're looking at kind of deriving information from the information that you have. Apparently, the complaints of Amazon candles not smelling went up by 6% at the start of COVID. And it wasn't because the candles weren't smelling; it's because people hadn't got a sense of smell, and that sort of deriving your trading strategy from some of the data that's out there and how you interpret that is going to become more and more important. And I think our job as vendors, if you like, is to deliver that data, but it also needs to be ordered, it needs to be clean, it needs to be understood. And Richard, I know I used this example with you before, but my granddad used to keep every piece of wood that he ever had. Okay, but it wasn't necessarily catalogued. He didn't necessarily know where to find each piece. He didn't necessarily understand how he could use each piece, and therefore he never made any fine furniture. And it's the same with the data. If the data is not delivered in a structured way, in a clean format that people can understand and they can actually use, then it's effectively useless. You're just storing a whole load of information you're never going to use. I think from an Iress trading point of view, one of the important things is that we have to make sure that our platform is open. We have to make sure that if our clients are consuming data, whether that's on Amazon candles or whether it's whatever else it happens to be that they want to use that to derive, that it's open enough that they can put that data into the system, and that data can then be used, whether it's in scripting or programming or whatever, as the sort of data scientists and traders kind of sort of merge roles, that data can be used, they can make their decisions, and they can get that into the platform in an open way.
Absolutely agree with you that there's a need for flexibility of data and a different consumption strategy around it. And I guess that leads us into some thoughts around how cloud-based technology is going to define things going forward. We've had a couple of questions in around the impact of AI technology as well, which links into this. And I'm interested to know how the panel feels about this as the next generation of allocating funds to smart strategies that use the data far quicker and far more aggressively than we traditionally have done as individuals, and how you feel the business model and the market model changes for that. Open to one of you to start, please.
So I guess from a consumer point of view and from a licensing point of view and sort of surveying across all the client base there, and this may be controversial, but technology is doing a good job as well as a bad job. It's a good job, of course, because there is lower latency in terms of speed. There is greater throughput in terms of the content. There is huge amount of waves of historical data that you guys are keeping and storing and providing. But I think where it is lagging a little bit is that consumption in an effective way is lagging. And what do I mean by that? I mean that there is, if we look at the evolution, I'm going back to what Russell said just a moment ago there, if we look at the evolution of the professional user, the banks, the financial services industry, there was a lag between what the research done at academic level was, and then it filtered down through the trading practices and strategies. Today, and has been for a few years now, we have the MSCs and the PhDs sitting at the end of the desk, or remotely now, of course, coming up with these amazing strategies, which is purely a mathematical view of the world. So we've applied science to data now, and what Russ, what you said about the data scientists holds true now. It's a huge business, and it's a great consumption opportunity there. So in terms of that, that's very important, in terms of the technology. But there's also this question versus, a platform versus platforms. If we hark back, and I'm using Russell's technique about his granddad in the wood, but why did Woolworth, for those of you that remember Woolworths, why did it go bust? It was because there was nothing special you would go there for. Everything that Woolworth did, you can get in other shops. So there needs to be some unique event or unique provision of data that whether you go to a super low latency such as Stephane, QuantHouse, or you go for breadth of data with Luke at Morningstar. And I think that is being superimposed in a very good way on Ipsx, and it shows the availability of the different distribution channels.
Thank you, Rafah. Can I just, obviously, at the same time as we're discussing it, throw it out to our audience that if you have any further questions, please keep firing them in, because we have a number of points to discuss and certainly a little bit of time left to do so. I guess the question that I'd like to lead on from that we've had coming in as well this morning is, what is the greatest technology challenge ahead that we believe the industry has to focus on? We are a new exchange. We're working with established partners. The time frame is moving quickly, and things are adapting rapidly. Stephane, where do you see the greatest challenge coming from a technology standpoint for something like QuantHouse? What's the next big leap forward for yourselves that the rest of us are going to have to get used to? Because obviously progression tends to work down through the different asset classes quite slowly normally.
One of our main challenges is in fact the gap between the level of technology we're able to design and provide to our clients and the level of knowledge in the industry able to understand it. That's a big problem for us, in the sense that yes, we are providing technology to build robots and to help clients trade with robots, but at the end of the day, you need to have human beings around those robots to assemble PCs, API pieces, for example, and components to use what we are delivering in terms of AI, machine learning, all these kind of very advanced tools. And one of our main issues is not specifically the tech to develop those leading edge technologies, to find people within client organizations who are able to understand it, B, assemble it, and use it. And we are, I don't know if you knew or remember those periods, but it's like in the 95 2000 period of time where everybody was discovering, in fact, IP networks and the internet, and every single company wanted to have their own local and wider area network and so on. And you had a big lack and shortage of network engineers. So it took a lot of additional years to really help all this community to migrate from the older type of way of sharing information to the new way. It's going to be the same thing here, and it's so in other words, this shortage of knowledge will certainly need a generation that is 50 to 20 years to really be able to have everyone access to this technology, because for the moment a small portion of the community has the possibility to use this technology, because only a small number of this community is able to understand it. Having said that, Ipsx Day Ones has all those tools available on the table for whoever wants to trade on the Ipsx. So the floor is on the client side to use it or not.
I think that's the key thing to mention, isn't it? We've said this before, Richard, that actually as a new exchange, a new entrant, the most important thing for you is low barrier to entry to any of your clients who want to access it. And by plugging into an existing network, an existing framework, and lowering those barriers to entry, the data's available on QuantHouse, the trading's available at Iress, the market makers are supporting it. You've kind of done the major technology hard work to get that exchange out there. I think the other challenge that we see at Iress is as you get more and more complex technology, and as each of the parts of trading platforms, or the ecosystem of trading evolves and becomes more advanced, it probably becomes harder and harder for a single vendor to provide everything that somebody needs on the desk. So you have specialists, QuantHouse on the market data side, and Morningstar and so on. At Iress, we specialize in the core trading platform, but where you're looking at alternative data, where you're looking at kind of complex algorithms or sentiment, with you're looking at calculations outside of platforms, analytics and so on. I think what we're seeing is that we need to provide a very good core framework for all of that to happen in or on. And then we need to have the hooks into and out of that technology. So we need to allow the traders to make those decisions outside. We need to be able to bolt that in. Then you get around to sort of desktop interoperability and so on as well, where it becomes best to breed now for all these different parts of the system, but they all have to play nicely together.
I think it's a very good phrase, that they all have to play nicely together. I think that's exactly the case as we move forward. Luke, you must be seeing that with how you're working with people, that everyone now is part of that ecosystem, that we're all going to have to find operational efficiencies moving forward that allow people to transact business through us and on our exchanges. But equally, we have to work together, because not one company is going to dominate one portion of this, and it's moving too quickly. So those challenges themselves throw up great opportunities, don't they?
Yeah, they do. And I agree with all the points that have been made so far. Exactly that. As a market data vendor, traditionally you were the place where you would go to get all of your market data needs. That no longer really applies in a market like we're in. It's more about, as Russell said, finding those hooks into other platforms that can complement your data, and then also making that data available to your customers in a way that's easy to consume. And that may not be through your own platform. That may be creating hooks that put your data into something else that enables someone to come and get your data from a third party, and whether that's a cloud-based technology firm, whether that's a competitor, whether that's a redistributor of some other sort. But it's about how you make that data available now more widely to complement what other platforms have, and how you create hooks into your own system for others to complement your data by providing data as well. And it all comes down to ease of use for the customer, ease of use for the end investor, to ensure that they can get value and improve their investment going forward, rather than the traditional method, which is large data sets, cumbersome to work with, difficult to break down. It's more about how you create APIs that can provide individual data sets for individual instruments on the main instruments, micros and mini instruments, that the exchanges are making available and making it easier for people to invest in. So there are great opportunities out there for firms to tap into that market, create those hooks into existing platforms, and become part of the wider ecosystem that is now the market data and financial institution network, rather than just individual companies that dominate the market.
All good points, Richard. Just to pause there, we have a question.
We do indeed. You beat me to it, sir. Question being slightly. You have to excuse me. I'm on an iPad. So the question that's just come in is, and then very topical in regards to what we're talking about. When will Ipsx launch the first property on the prime market? I can't put an exact date on this, but it's very soon. We're in the process of going ahead with our first IPO when, with our partners that are gathered here today, we should start trading, I would hope, by the end of this month. But I'm obviously unable to put a firm date on that. But I think it's a great time for us and for all our participants here to look at this change of dynamic of people's investment strategies, the move to active strategies, and the move also to a far more individual investment strategy. I hark back to Russell's point, or what could have been Stephane at the beginning, about 25% market share coming through NYSE. The UK was around 8. It's run it to 12. It's had peaks that are far higher than that, and I think it'll settle out personally somewhere in that mid to low teens area, because the current interest rate environment means that people are going to explore other ways to manage their funds. It's going to open up a whole new trading and investment strategy for all of us in whatever fields we do here, because of the fact that their demand environment is changing. So to have this conversation again in a year's time, I think we'll be talking about different technologies and different angles and different stresses. I think that's a good point to close out. Unless there are any further questions or comments from the panels, please feel free.
Just to mention on the last question, I think one of the things, and I've done deals for clients with all the vendors here, and many of those, the biggest deals, have not been out of the box. So one of the things that I'm constantly pushing suppliers for, and it's often overlooked, is innovation. What are you going to do today that you weren't doing a year ago? What are you? And I've had these conversations with Stephane and Luke, and in different projects, and it's a very interesting question, because you're not sitting at opposite sides of the table. You're sitting on the same side of the table, looking at this important question. And one of the things, certainly, somebody, I used to run exchange information services businesses and so on, is what is cyclical? Where's the cyclical opportunity versus what's the new tool in the box? And that, again, that's a challenge, because it's a lose-lose situation. So in the end, why are these 3 vendors and Ipsx in existence and still in existence? It's because they've evolved their business model. There's no way that any vendor can continue with an API feed or a terminal business by itself. There's innovation in everything they have to do, because there's constant demand there. So that's sort of what I wanted to say on that. But
there's some very pertinent closing remarks. I mean, Luke, is there anything you'd like to add to that as we work our way around?
The only thing I'd add is exactly that, is as a business, we need to innovate what we are supplying. We need to use the technologies that are becoming available. How do we move, for example, away from the traditional on-prem model, put data into the cloud? How do we use that to our benefit to provide smaller chunks of data alongside other data sets that don't belong to us, to make value to our customers? Because ultimately, we only exist because we provide value to our customers. Without that without that, as a business, there's no real impact. So we need to be looking at how we innovate in that area, how we provide value to our customers, and make their investment journey as easy as possible, because they are where the business is progressing. They are going to be the driving force behind the future of where market data sits. If you look at other industries that have gone through the same process of decentralization of purchasing, the insurance industry is a great example. 15 years ago, you would go to a broker. Now you do it yourself online. I don't see any difference there in terms of the market data financial industry. We need to drive that innovation to make that possible for our investors going forward.
There's actually a very interesting question here. So maybe it's not me to answer this one, but
absolutely, Stephane. Do you want to frame the question, or do you want me to do that for you?
Yeah, I mean, it's just a question in the chat where the question is, did IPSX think about building the entire tech infrastructure in the house, providing data, matching trades, running the order book, and so on, the same way as new crypto exchange do? If not, what are the reasons? I can tell you that as one of the leading data vendor in this world, connecting, in fact, leading edge liquidity pools to leading edge clients, crypto exchanges are absolutely not a good example in terms of technology, whether for the matching engine or the way they structure and distribute data. Maybe it's not a question for me, but IPSX, as I think, has done day one the right choice to use the experts in terms of trading technology, whether it's for screen trading or matching engine or data framework from the industry. And in order to day one provide leading edge technologies to all their trading participants. And God knows that we at QuantHouse, we have the extreme difficulties to interact with crypto and traditional crypto exchanges, whatever the names are, because in fact, most of the time I'm not criticizing this asset. I'm just telling that they have, for some of them, tried to reinvent the wheel in a couple of months, where in fact this wheel was already in place and developed and extremely accurate and performant and available from leading edge vendors. So
I think that's absolutely right, Stephane, and I couldn't echo those sentiments more. You know, IPSX is on an amazing journey, and we're bringing new assets, and the new assets is hugely exciting for us. But to do that in a professional, robust manner, we want to partner with people that have proven technology and can deliver what we need. The last thing you want when you're trying to generate a new marketplace is to have an unstable marketplace. And I think, you know, we've had a number of conversations, and Russ, you and I have discussed this at some length. The infrastructure has to be robust. As we grow, the infrastructure will grow with us. And I think that's a very good response, Stephane. Thank you. Russell, if you just wanted to add any final comments to anything here.
No, I mean, I say from our perspective, the market's evolving. We know the technology is changing. I think from a trading platform perspective, the biggest thing we can be is open to working with other people. I say we need to play nicely in the sandpit with everybody else, because you know, all these things have to work together. You can no longer work in a closed shop. It has to be open. And I think the population of people that we have on the network, I think it sits very well with IPSX, and I think we're plugging into the right places to get everything to work. So. Yeah.
Absolutely. Well, thank you very much, gentlemen, for playing nicely in the sandpit this morning. Unfortunately, Rafah had to hop off to another meeting, but I'm sure it wasn't anything we said personally. Thank you so much, Stephane, Russell, Luke, and Rafah in your absence for joining us today. And thank you to all our attendees for taking the time to watch. This session has been recorded, and we will be making the link available shortly. Should you like to share it, it'll be with our webinars and podcasts on our website. Again, thank you for taking the time. I hope you found it interesting. I certainly have. I'm sure we'll revisit this topic as the technology moves forward and IPSX moves forward to see how market dynamics change. Thank you and goodbye.
Thank you, everyone.
Bye.